Hi guys, welcome to Gold Today. This video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for the coming week and from the United States, it's going to be a light calendar, and consider that Monday is a holiday in the United States, so we'll start from Wednesday waiting for the existing home sales to be released. Then on Thursday we'll be looking for the initial jobless claims, and on Friday we'll be looking for the manufacturing PMI. That's all. We'll move on now to the numbers. On the last week, gold traded between 1535 plus as a low of the week to 1561 plus as a high of the week. Numbers are rounded and the market is closed. On the last trading session of Friday, gold spot printed a closing price above 1557. The number is now rounded and the market is closed. Gold is trading in a bullish trend and it's above its all daily simple moving averages, and the momentum is seen in neutral to strong. For the RSI readings, it's moderate on all the charts with 60 on the daily, 69 on the weekly, and 69 on the monthly. And for the supports are seen about 1550, then 1533, and then 1519. And for the resistance levels, it's 1563 if taken, then 1585 if taken, then 1600. That's all for the numbers. We'll move on now to the trading strategy. Hi again. In our last video, we said that gold developed a strong support around 1533 after stretching higher towards 1611. We said that gold should hang around 1550 as a strong support level. What we have seen on the last week, that gold in fact did slide and came nearby that major support line. As we said, around 1533. Actually, gold reached to 1535 plus, and from revising the price action of gold, it reveals that the sellers are exhausted by now, and the potential for a big drop or a big rotation to the downside is getting less by the time. We do expect with the cycle calculation that by 24th of January, gold should start advancing with an attempt to set a brand new high. The move could take few weeks, but it will reach ultimately to about 1700. We are not aware yet of what kind of a storyline that will support such a huge move in the price of gold, but we all know, and it's not a secret anymore, that the Federal Reserve Bank already bumped the market with almost $500 billion since August in the repo market, and this is just damaging the value of the US dollar, which is expected to crash at any moment. To take advantage of such a huge move, which does not happen every day in the gold market, here are some tips for you. Don't short. Don't be so cute to short gold at the moment, because if gold started to move and moved above 1622 with a close, it will never see 1500 again for a few years. Also, wait a close above 1563. Now, let's be cautious. We don't want to be ahead of ourselves. 1563 with a close means that sellers are not available in the market anymore, which means that the only thing that you expect is to see gold pushing higher after closing above 1563. What kind of a storyline, as I said, would support such a huge move in gold market? We don't know so far, but we will leave it for the time to reveal it. And as I said, 1700 should be your ultimate target, which I believe that gold will reach there prior to the Chinese New Year. Uh, could be the stock market correction. It already moved so much high. It could be some geopolitics that we are not aware of it so far, but there should be some sort of a storyline that will kick this market to move to the upside. Moreover, as I said, the Federal Reserve Bank have pumped so much money into the market and weakened the dollar, and the dollar is obviously in a downtrend and could start a downfall heavier than anyone could think. And also, this gives a very nice uh, uh, story for the other currencies like the pound, the euro, which I believe it's a very good pick at the moment, because if the dollar is going to break, euro especially is going to benefit so much from this. That's all for this week. We'll see you next week in another video.